They showed you the charts. They pointed at the curves. They highlighted the exponential line going up and to the right. But they didn't tell you why it's not working for you. Because compounding isn't magic. It's not automatic. It's activated. And most people break the rules every single day without realizing it. Wealth doesn't explode overnight. It builds silently, in the background, while everyone else is distracted chasing fast wins, hype, and temporary validation. Money compounds. Skills compound. Reputation compounds. Relationships compound. Discipline compounds. Even small habits compound. But only if you follow the rules consistently, especially when it's boring, slow, and invisible. Here are the 20 rules that activate wealth compounding. Rule number 1. Start before you feel ready. Perfection is the enemy of time. And time is the most powerful ingredient in compounding. The person who invests small amounts at 20 will likely outperform the person who invests larger amounts at 35. Why? Because time multiplies effort. You don't need clarity. You need motion. Start the business. Open the investment account. Build the skill. Launch the channel. Messy action today beats perfect planning next year. Rule 2. Consistency beats intensity. Most people operate in bursts. They get inspired. They go hard. They burn out. They disappear. Compounding doesn't reward hype. It rewards repetition. One workout won't change your body. One investment won't change your life. One video won't build your brand. But done weekly, monthly, yearly, it becomes unstoppable momentum. Rule 3. Reinvest first, spend later. The wealthy delay celebration. They don't upgrade their lifestyle immediately after a win, they upgrade their assets. You made profit? Reinvested. You got a raise? Increase your investments. Your business grew? Scale it further. The average person consumes growth. The wealthy multiply growth. Rule 4. Protect the downside. You cannot compound what you lose. Avoid unnecessary risk. Avoid emotional decisions. Avoid get-rich-quick schemes. One bad decision can erase 5 years of discipline. Compounding requires survival. And survival requires caution. Rule 5. Increase your earning capacity. Your income is the engine behind everything. Investing small amounts is powerful, but increasing what you earn is transformational. Learn high-income skills. Negotiate your value. Solve bigger problems. When your income doubles, your ability to compound accelerates dramatically. Rule 6. Focus on ownership. Employees trade time for money. Owners build assets that grow without their direct presence. Ownership can look like stocks, real estate, businesses, intellectual property, or digital platforms. When you own equity, growth works while you sleep. Rule 7. Avoid lifestyle inflation. The biggest wealth killer isn't low income, it's expanding expenses. If every income increase is matched by a lifestyle upgrade, compounding never begins. The real power lies in the gap. The gap between earning and spending. That gap is your investment. That gap is your freedom. That gap is your leverage. Rule 8. Think in decades, not months. Compounding feels painfully slow at first. Year 1 looks unimpressive. Year 2 feels small. Year 3 feels average. Then something shifts. By year 10, the curve changes direction. The results stop being linear and start being exponential. Those who think short-term quit too early. Rule 9. Automate discipline. Motivation fades. Systems don't. Set automatic investments. Schedule automatic savings. Build habits into routines. When good decisions happen automatically, consistency becomes effortless. Rule 10. Eliminate high-interest debt. Interest is either your best friend or your worst enemy. When you carry high-interest debt, it compounds against you. Before building wealth aggressively, remove the anchors pulling you down. Clean foundations create stronger towers. Rule 11. Develop rare skills. Average skills produce average income. The market overpays for scarcity. If you can do what others cannot, income increases. And when income increases consistently, investment power expands exponentially. Learn sales. Learn negotiation. Learn communication. Learn strategy. Skills compound just like money. Rule 12. Build multiple income streams. Relying on one source is fragile. Multiple streams create resilience. And resilience allows you to keep investing even during tough seasons. More streams mean more surplus. More surplus means faster compounding. Rule 13. Master delayed gratification. Wealth is delayed consumption. Every dollar you choose not to spend today becomes multiple dollars tomorrow. It's uncomfortable in the short term, but life-changing in the long term. Most people sacrifice their future for present comfort. Wealth builders sacrifice present comfort for future freedom. Rule 14. Control your emotions. Markets fluctuate. Business fluctuates. Income fluctuates. Emotional decisions destroy exponential growth. Panic selling in fear. Overspending in excitement. Quitting in frustration. Compounding demands emotional stability. Rule 15. Track your numbers. What gets measured improves. Know your income. Know your expenses. Know your net worth. Know your investment returns. Clarity removes confusion. And clarity improves performance. Rule 16. Surround yourself with growth-minded people. Your environment sets your standards. If everyone around you normalizes debt, you'll normalize debt. If everyone around you invests, builds, and learns, you'll elevate automatically. Energy compounds too. Rule 17. Increase your contribution. Income flows to value. The more people you help, the more problems you solve, the more income you create. Scale your impact and your earnings scale with it. Rule 18. Stay in the game. This rule might be the most important. Many people were inches away from exponential growth, but they quit during the boring middle. Compounding rewards those who refuse to leave. Years of consistency eventually compress into visible success. Rule 19. Protect your reputation. Trust compounds faster than capital. When people trust you, opportunities expand. Business grows faster. Partnerships multiply. Access increases. Guard your credibility as fiercely as you guard your investments. Rule 20. Believe in exponential growth. Compounding looks flat before it looks powerful. For a long time, progress feels invisible. Then suddenly, income jumps. Investments accelerate. Opportunities stack on top of each other. And people call it luck. But it wasn't luck. It was disciplined obedience to the rules. Here's the truth most people ignore. Wealth isn't built in viral moments. It's built in invisible discipline. It's built in controlled spending. It's built in patient investing. It's built in staying calm when others panic. And if you truly understand compounding, you stop asking, how fast can I get rich? You start asking, how long can I stay consistent? Because the longer you stay consistent, the more powerful the curve becomes. So here's your challenge. Don't try to apply all 20 rules at once. Choose 3. Commit to them for the next 5 years. Not 5 weeks. Not 5 months. 5 years. Track your growth. Increase your income. Reinvest relentlessly. Protect your downside. If you do that, your future self will thank you in ways you can't even imagine today. And if this video shifted your perspective on wealth, subscribe and turn on notifications. Because we're not chasing hype here. We're building systems. We're building discipline. We're building long-term freedom. Your wealth won't be built in one breakthrough moment. It will be built in the quiet decisions you repeat daily. Start today. Let it compound.